Hi, Warren William here from Smartest Data. Let's take a quick look at the Intel results from last week. It's certainly a bit of a tech wreck, and there's certainly tough times ahead for Intel. So Intel, it's one of the world's largest makers of semiconductors, along with AMD and Taiwan Semiconductor. So they posted their fourth quarter earnings results last week, and they were much weaker than expected. And as could be expected, the Intel share price got hammered on the results. So what's the short-term outlook for Intel? The key component was the lingering weakness in demand for PCs, and this is likely to pressure margins and profits over the coming quarters. Intel's Q4 adjusted EPS came in at 10 cents per share, half of what was forecasted by analysts at 20 cents per share. Revenues at $14 billion were below the consensus of $14.5 billion, and gross margins fell to 43.8%. The damage is largely across the board. Client computing revenues down 36% to $6.6 billion. Intel Data Center and AI division showed little strength, where revenue was down 33% to $4.3 billion. Network Edge Group were frankly flat at $2.1 billion. So let's take a deep dive into the results. Onto the Intel earnings call, and the key comment was, we stumbled, we lost share, we lost momentum. Weak PC demand is to continue over the next 6 months. Data center clients are cutting spending due to continued macro uncertainty. Intel did not provide guidance for 2023. The situation is surrounded by uncertainty. Ideas were put forward by some analysts that the current correction could be followed by a recovery later in 2023. The production of the Sapphire Rapids chip later this year may give some support in the data center space. The 2023 financial year is expected to be challenging, following on from the COVID pandemic and the lingering impact on the semiconductor sector. The rapid deterioration in business conditions from boom to bust due to the drop in demand for PCs is a big factor weighing on the sector. Investors must question if Intel will compete against both AMD and Taiwan Semiconductor. There is significant uncertainty about the current valuations, considering the considerable headwinds. Forward PE is 17.38 times. I would question this due to the uncertainty regarding earnings. Return on equities 7.49%, and the margin is sitting at a lowly 25.7%. Intel has been far from a growth company in the tech sector. The 5-year revenue growth has been 33% over the period, whilst earnings have doubled. Earnings EPS growth between this quarter and the previous quarter is expected to be down a massive 83%. The annual dividend is expected to be $1.46, but I would question this. I'll touch on this later in the video. Moving on to the graphs for Intel, so on the left-hand side we see the combination of the Bollinger Bands, the MACD, the RSI, and the stochastic slope. Then on the right-hand side we can see the Bollinger Bands. The volatility has tipped up, but it's sitting up at the upper end of the Bollinger Band at this point in time. Moving on, then onto the MACD, you can see there is a crossover and the trend is turning down. If you look onto the RSI is heading towards oversold territory. That does not mean the stock is a buy, it just means that it is oversold. And then finally on the moving day averages, you can see the 200 moving day average in green is starting to turn off now. If we go on to the quarterly results, quarterly expectations, Intel stated that in the current quarter, revenue continues to slow. Their expectation is between $10.5 and $11.5 billion for this quarter. Q1 2023 gross margin is expected to narrow to around about 34.1%, around half of the long-term target of around 60%. A loss is expected for Q1 2023 of 15 cents per share. The dividend is questionable due to continued capex. I think regarding the tech sector and the semi sector is clearly facing a lot of headwinds at this point in time. I think give it a pass at the moment. Let's reevaluate Intel later on in the second half of 2023.